All right, we're getting into it now. We all know that this industry, blockchain, knows no boundary. I mean, one of the things that amazes me all the time is how many people I talk to in this business that I have created a new term for them. I thought it was a thing, but people are like, oh, I've never heard that. NFA, no fixed address. People in this business are everywhere in the world, around the world, all the time. Our next moderator of our panel coming up, he exemplifies that, which makes him a great person to moderate an international trends panel. Gordon Einstein, don't let the name fool you. He's not a typical Gordon, but he is definitely an Einstein. He's a fantastic lawyer, a crypto lawyer, technologist, and enterprise strategist. And what does that mean? It means he's a lawyer, sure, but he's a lawyer with vision. When he saw how big cloud computing was getting back in the knots, as they call them, he saw the trends and he founded his own law firm, Adaptive Sky, in 2010. And while he was doing that incredibly successful firm, still going strong, he then was looking to the next big thing, and he saw crypto coming. 2014, he founded Crypto Law Partners, which tells you how early he got into the space. He had the vision, he had the passion. He doesn't have the crazy hair, but once again, he is an Einstein. So ladies and gentlemen, please welcome Gordon Einstein. Come to the stage and take command.
Wow.
Yeah.
That was an amazing introduction.
All right, take it away.
Good to see you all. I may have vision, but I have bad vision. So I'm going to be popping these on and off right now. So I'm very happy to be here. This is actually my first time in Hong Kong. So let's give it up for Hong Kong and NexChange. Everyone? That all being said, it's not the Gordo show right now, or it's not the Gordon show right now. I have a great group of panelists. I wasn't sure if we were going to have chairs or all be standing, but I guess at least they will be sitting. I may be standing. We'll see. So let's bring them on one at a time. This is almost like the Academy Awards. We got Cecilia Mueller Chen. Cecilia. It's like the Academy Awards. You got to clap. Okay, we have Matej Michalko. Us up for Best Director in a Swiss film. And we have Joshua Hong, please.
Hey, Joshua.
And I feel like standing up. If anyone objects, sorry. I may sit down if I get exhausted by the debate. We'll see how this goes. So let's just first introduce our panelists. They're a great group of people. And Cecilia, you are the queen of Swiss regulation. Tell us a little bit about yourself. Tell us about Comply. Just lay it on us.
So, yes, Cecilia Mueller Chen, founder and CEO of Comply Now. I offer global regulatory advice, and I'm actually a former chief compliance officer and chief operating officer in global financial institutions. So I've worked at UBS, where I was a COO, and Deutsche Börse, and I was my last role was Chief Compliance Officer at China Construction Bank Zurich. So I built up a trading floor. I built up 3 compliance units back to back. And I've worked with the largest market makers and wealth managers globally.
That's great. And perhaps I neglected to mention the topic of the panel is international global trends for blockchain.
Right.
So obviously compliance is fantastically important.
Absolutely.
And I think you're connected with the Global ICO Transparency Alliance?
Yes, so I'm one of the founders of GITA. I very much believe in these open disclosure consumer protection standards that they're pushing forth. And then also, I am also part of the regulatory policy working group of the Crypto Valley Association in Zug. So I co-drafted also the code of conduct and drafting position papers, writing to regulators very proactively on the crypto space. So very much involved with Swiss and EU and UK regulations.
Right, and we all met before running this panel, and Cecilia shows up with like 20 pages of notes. So if you want this dictated into the record, maybe we can do something about that. Great. So Matej, if I'm saying that correctly?
Yes, Matej is correct.
You're also
yes.
part of Team Switzerland?
Yeah, we are based in Switzerland, but I'm from Slovakia originally.
Oh, there you go.
Yes, we are a Swiss company.
Switzerland, Slovakia, close, right?
Yeah, it starts with S, so both of them.
Very good. Tell us about Decent. Tell us about Alax.io and a little bit about yourself and your background.
Okay, perfect. So thank you very much. My name is Matej Michalko, and I'm founder and CEO of DECENT, which is a blockchain digital content distribution platform. This is how it started. We started in early 2015, and as one of the let's say, one of the very early blockchain companies in the world. I'm saying we are 4 years old, but in the blockchain world, it's ages already. And we've been focusing on the content distribution on the blockchain to bring the power to the creators, basically to eliminate the middlemen, such as Amazon or those which take exorbitant fees and stuff like this. So over 4 years, we managed to do one of the very first ICOs in the world. It happened in 2016, where we raised almost 6,000 bitcoins. And the value of this changed over time, of course. And we managed to build a comprehensive ecosystem, and we have different verticals in content distribution, media, energy, aerospace, and defense, and so on. So we keep expanding as a company. So if you look at the blockchain space today, there are a lot of blockchain and ICO companies. They are firing people, but we are actually hiring new ones. We have 130 people full-time all over the world. We have offices in 8 countries, and we keep expanding every day. So this is for Decent. Concerning Alax, Alax is one of our JVs with a gaming company from Taiwan. With Dragonfly, we basically raised about $4 million in funding last year for this. And what is Alax is basically Android game store. So it's kind of something similar to Google Play Store, but it's designated for Southeast Asia, for emerging markets and Africa, and for unbanked people. So basically, it's something like Google Play Store where you can pay with cash directly. So for example, we have a partner 7-Eleven in Indonesia, and people can top up their credit with cash directly. So you don't need to have a bank card. Because in Southeast Asia, countries like Indonesia, Vietnam, Thailand, and so on, a lot of people are unbanked, probably more than 50% of them sometimes.
Sure.
So this is something they need. So we are launching this in 2 weeks, and of course you can find more at alax.io. And a few words about myself. So my career is purely in Bitcoin, cryptocurrency, and blockchain. I organized the second Bitcoin conference that took place in the UK. I was actually a co-organizer. It was Bitcoin Expo 2013. On 30th of November 2013, we got about 1,000 people in Brick Lane in London. And since then, I got a lot of stuff did a lot of stuff with Bitcoin and cryptocurrency. I was one of the very early persons to talk to regulators in the Isle of Man in late 2013 about cryptocurrency, about the regulation of that. I was in marketing. I founded one of the first Bitcoin marketing agencies in the world called Bitcoin Marketing, surprisingly, and a lot of stuff. So my career is purely Bitcoin. And I studied IT, but mainly Bitcoin and blockchain. So it's built to last, and we will be here. There will be a lot of people, jumping on the bandwagon recently of the ICOs, but we've been here before. We were, during the boom. We are here now. So.
And you're still here.
Of course. And
you haven't moved to Ibiza with all the money.
Well, this is not we do, all right? So
fantastic.
we bring value. So
I love it. And then Joshua Hung,
yes,
from Futurama and from Mind. Tell us about yourself, and fellow California native or part-timer. So go ahead.
Yes. So I'm Joshua Hong. I am one of the co-founders of Futurama. I don't know whether some of you been to our event. But we started that event back in May of 2018. It got started in Dubai, and then we had our second event in Ibiza.
Which I missed, which I was very annoyed about. Yeah.
It was a lot of fun. And I have I'm an entrepreneur, so I am a co-founder of Mind AI. It is a blockchain-based artificial general intelligence ecosystem that we're building. So the company is mainly based out of South Korea, but we have a foundation in Liechtenstein. So before I actually got into blockchain space, I was a venture capitalist. I was running about a $150 million fund. I ran that about for 3 years. Prior to that, I built 3 online game companies, and I had some exits from those startups that I started. That was about 15 years ago. So
we have a great panel here.
Yes.
Just real quick, Gordon Einstein, crypto law, but it's not the Gordon show. We're going to make it about the panelists. So, let's just hit the topic of the panel, which is what are the trends? Where's the technology going? And if you had to forecast out 2019, 2020, just if you had a crystal ball, what can you tell our audience? What's trending? What are the business use cases that are developing? Are we seeing some move away from infrastructure to more B2C or B2B? And then you had some comments about institutional and corporate developments, including JP Morgan. So we'll start off with you.
Yeah, so one of the other hats I also wear is that I'm also the founder and former chair of 100 Women in Hedge Funds in Zurich Education Committee. I did that for about 8 years. And what I'm seeing in Switzerland is that some of the financial institutions, they're actually entering the blockchain crypto space. They're much more progressive than I think some of the banks, I'm told, in Singapore. And so I don't know if you guys have heard, but Julius Baer is now going to offer digital assets, likely securitized tokens, to its client base. But they're doing this in partnership with SEBA. SEBA is like a challenger bank, and they're all former hedge fund, basically FX guys or some of the hedge fund managers who are doing this. And so my prediction in terms of going forward is more larger financial institutions are going to enter this space, and actually I know at least 2 or 3 different financial institutions that already have stable coins in the pipeline, and they're working with the regulators to roll out very progressive blockchain strategies, and yeah, they're doing this because they're under a lot of cost pressure. The customer loyalty is not there anymore, and they're responding to also the different changing needs of the digital client. Yeah.
So would you include JP Morgan among the quote-unquote progressives?
No, there are other more progressive banks. So some of the larger financial institutions, I would say, are trending in the middle of the pack from my perspective. Some of the smaller and medium-sized banks, because they have more flexibility, they're more progressive. Yeah.
Okay, and you're seeing, if you had to name a geographical center, you're saying that Switzerland is sort of at the cusp right now.
Yeah, at least for financial institutions, yeah, they're much more progressive. I know at least 5 different banks that are offering digital assets. They're offering custodial services, wallet services. Yes, so they're competing head-to-head with some of the Crypto Valley startups.
Interesting. Okay, and then
So I have a question for you, Cecilia. So with regard to JP Morgan,
right?
I am actually blown away by the fact that maybe 18 months ago, Jamie Dimon sort of publicly spoke against blockchain.
Sure.
He basically belittled, if not ridiculed, the entire space by saying something of illegitimate, it doesn't work, it's a joke. Now he's flip-flopping, and then sort of kind of ride this wave of stable token. And how does that happen? And then now JP Morgan is progressive.
I mean, I don't represent JP Morgan.
I understand,
so
but I just want to understand the sentiment in the banking industry. And when they say they're going to come into the blockchain space with this stable token, what is their intention?
They've devised their own token economies. Right?
Their
They
own-
already have, right? These guys have, 52 million clients, maybe 100 million clients, depending on how universal these financial institutions are. They're already highly regulated, right? And so they're playing with different use cases right now, and depending upon, what particular division they're going to roll it out, or which use case, they're offering these particular stable tokens in order to work within their particular blockchain strategy or token economy. Yeah.
and I also I believe that the JP Morgan coin is not universally available. It's almost like an internal
Very specific,
marking
yeah,
for
very
use
specific.
between institutional clients, maybe almost as a back-end infrastructure thing. It's not a listed crypto.
So it's a permissioned coin, right?
Basically.
So
Probably.
users
Yes.
do not have the actual access to the private
Yeah,
key.
it's almost behind the scenes. It's almost like a private DLT, just almost within themselves. I don't know if it
Exactly,
truly
yeah.
qualifies, but I think we're seeing
Whether this
true
is
institutions being a little bit more brave and daring, perhaps in Switzerland.
so it's not really a public blockchain, right?
No.
No. Okay.
It doesn't
Okay.
sound
I
private.
didn't know much about this, so.
Yeah, I don't know if we
Yeah.
can trust JP Morgan to do that. So, Matej, what are you seeing in terms of big macro global trends in blockchain for this year and the next?
so I would maybe shortly complement what has been said over here from the technology itself, right? The technology point of view itself, because I'm really not fond to talk about banking because my background is not in there. Basically, I think that the trend will be towards the actual integration of the blockchain technology. You know, the last year, 2018 and 2017, it was about promoting the hype about ICOs and what can be done and so on. But there was really not the actual delivery. We have not seen really the actual blockchain applications in business, right? It was just maybe some POCs, but not much more than this. But I think this year it will finally come that the MVPs, I would call them minimum viable products, at least will be commercially viable in business applications. Just for instance, what we are doing, we have an application in aerospace and defense. So we have a lot of discussion with military in various countries to integrate that. So it's something at the level of government contracts for military. And basically, the goal is to trace parts in supply chain in the airplanes, right? So we are, for example, working on this. So this kind of application, I think the trend will proliferate concerning the B2B applications. So B2B applications in technology, in B2C, I'm not really sure to comment, as I don't have the crystal ball to say what will work and what will not, but basically what brings users and what brings value to users, as for instance, what we have the application for unbanked users. They can buy digital content using cash, so this is obvious value compared to Visa or MasterCard, which they don't have. This is the way I think emerging markets, Southeast Asia, Africa, this can be a trend for this year in B2C. And the third thing I wanted to mention about investments or crowdfunding, it's kindly shifting from the ICOs. ICOs are stopping to be that popular as they were last year or in 2017. Towards STOs, towards something more regulated, towards getting shares in the actual entity which is issuing the token. So it's coming from utility tokens into security tokens, and the security tokens represent shares. So security tokens are nothing else than digital shares. So
let me anticipate a panel from this afternoon. I'm going to be running. When I think about STOs, I think about two models. There's tokenizing existing security types, such as shares of stock or debt. But then there's also creating a new kind of security, basically a contract, and then having, the first time when you tokenize an existing type of security, it's just a tokenized security. Maybe you can do something new with it, but it's sort of repackaging old wine in new bottles.
Correct.
But then there's security tokens, which allow you to create new forms of investment that never existed before. They're basically contracts, but they can be more than contracts. They can be intelligent atoms, if you like, that combine into new things. And I think we're just about at the cusp of this. Do you sense which model, if either or both, will be what's going to emerge in 2019 or 2020? With your ear to the ground and having gone through this process yourself, what are you sensing?
Yeah, so concerning myself, I cannot really comment about the second model because I do not have the background to comment about this. But concerning the first one, I've been talking a lot with, and our team is talking a lot with lawyers in Switzerland and Liechtenstein, in particular about tokenizing securities themselves. So for instance, someone wants to tokenize a company, right, which has revenue, and basically in the company there are 100 shares, and he decides that, okay, I want to raise some additional capital and I want to tokenize 30% of the shares, so 30 shares, and basically there is a way to create the one-to-one correspondence between the shares and the token, and after this token is sold to accredited investors, which have been KYC'd and AML'd according to the regulation. The problem with this concerning Switzerland and Liechtenstein is that there are two kinds of shares. There are voting shares and non-voting shares. In general, of course, there are can be multiple classes of shares, but let's start with Switzerland. So voting shares, of course, you can issue, but in Switzerland, the bearer shares have been abolished. So it's a little bit more complicated to keep the shareholders register in there. But in Switzerland, there is something called Participationsscheine or the Bon de Participation in French, which is something like non-voting shares. So you can kind of issue the non-voting shares to the investors and tokenize them and sell them. But the problem is that you cannot raise inside your company, those shares cannot constitute more than 2/3 of the total equity, if we simplify to the equity. So basically, you still need to keep one third as a voting shares. Liechtenstein is a little bit better. There are still bearer shares, so we can issue actually voting shares, but you still need to keep the shareholders register. But there is going to be a new blockchain act in Liechtenstein, I think in September, October. I talked to the Minister of MFA to Mrs. Frick last week, and basically probably I think this is going to pass. And what this says is that the shareholders registry can be on the blockchain, right? So we do not need to keep as a paper inside the company, like who is the shareholder, or with the custodian, as you have to do in Switzerland. But you can do it on the blockchain, on Ethereum blockchain, for instance. So this is kind of the innovation. The shareholders register can be on blockchain, and Liechtenstein could become one of the big, jurisdiction, or the most important jurisdiction for STOs because of this, and because of the easiness of the jurisdiction.
Let me get Futurama in here, since you're heavily involved in blockchain investments. And
Yeah.
what are you seeing in terms of developments, in terms of investments, in terms of jurisdictions, in terms of the form of investment? And where do you see things going?
Well, it's a very confusing time right now, but just sort of kind of latching on to the previous discussions about the future of STO. I am extremely pessimistic about STO. Actually, legally speaking, or from just a pure corporate finance perspective, and also most importantly, the liquidity perspective, I don't believe that the security token will be a dominant form of tokenized assets, simply because the legal framework required to make it compliant is going to be just as same, if not possibly more complicated than, let's say, equity or issuing bonds. If that's the case, then why go through the whole pains of tokenizing something that's already securitized? So I think a pure sort of a security token, meaning you have a token asset that has a lien on certain future cash flow or asset.
Well,
I think the liquidity-wise, it's going to have an issue. However, in terms of coming up with a very smart, synthetic, new type of crypto asset, that's the future. But the problem still doesn't go away. The problem is the regulators cannot put their hands around it.
Yeah.
So we're still getting into this chicken and egg situation. So I think it's going to be more and more increasingly very complicated world. And yes, places like Liechtenstein, places like Switzerland, all these interesting jurisdictions may come up, but if there's no money behind it, what's the point? And big money is still in the US, it's still in Germany, it's still in UK, still in China. And those places, once you claim something as a security, the framework was suffocated. It's going to be very complicated and very expensive to issue security and manage it. So that's just my personal sort of perspective.
So what comes first, the regulatory framework? I mean, Uber had to sort of move fast and break things way progressing. Then finally, the cities and the states caught up, at least here in the US.
And look at what happened to Uber. Uber used to be a global, now sort of kind of chopped up into more regional plays, and they made a lot of compromise, bought their stocks, and so Uber isn't what it used to be. For example, China, they got into China, got their ass handed over, but still got own big chunk of the local sort of company. So I think in the next couple of years, we're going to see a lot of dance or courtship between creative entrepreneurs looking for liquidity, and then the regulators looking to contain the situation and protect the interest of the investors. Yeah. And that confusion, that back and forth, 2 step forward, 1 step back, 3 step forward, 5 step back, that's going to continue for the next couple of years. And I don't have a very clean-cut solution, other than there's got to be a lot of, sort of kind of back and forth happening.
Yeah.
Ms. Cecilia, I think.
Can I just comment on that? I mean, as part of the Regulatory Policy Working Group in the Crypto Valley Association, we've written different position papers to the Swiss Federal Council. They issued the new legal framework governing distributed ledger technology. And exactly that issue that you've just highlighted, the legal uncertainty around the actual transfer of ownership rights through the distributed ledger, right, is not there.
It's not there.
It's not there. plus, it's not sufficient for the generation of the legal relevant information or for the transfer of the right or the clarification of the ownership of the right. So there's three different things that need to be clarified.
Right.
However, they've just issued, they're going to make amendments in the securities law and also in the civil code, because Switzerland, the government wants to make sure that it's positioned as a crypto nation, and it's in their pipeline of things to work on. We will be issuing comments from a Crypto Valley Association.
I mean, I do think
so
that
they recognized it, and they want to provide legal center.
Right, they have to, but
legal
there's no
certainty,
solution.
Yeah, on the securities
Right.
side.
I mean, they will look into it, and there might be some appearance of solutions, but it's not a dead-on solutions. So I think there's there's going to be a lot of confusion, and I think this is why the roles of some of the major universal banking groups like J.P. Morgan or UBS or Goldman Sachs, I mean, those guys have certain role in expanding or even creating that sort of a compromise between these highly creative entrepreneurs with the central banks or the regulators. But in the end, philosophically speaking, blockchain is all about giving up control and decentralizing the governance structure. That collides with the current banking system, which is all about centralized control. I mean, like entire banking system on this planet is controlled by roughly about 15, 16 central banks out there. They control the money supply. I don't see how they're going to let that go. Let that control go. And so no matter what we try to do, there's going to be some kind of like clash that is not something that we could reconcile very easily. And the only way that we could reconcile is just creating many tiny little bridges, and that's going to take a long time.
Well, this may sound funny coming from a lawyer.
Yeah.
Okay, but is there either a philosophical, tactical, or strategic argument for operating somewhat in the gray zone in order to push events, whether they like it or not?
And it's an opportunity for entrepreneurs.
Asking for a friend. I mean, is there?
I think so. I mean, yes. I do think that I urge entrepreneurs to be more creative and then get out there and seek those liquidity that they need to build proper products.
Yes, if I can just comment a few words about liquidity. You mentioned that probably tokenize something which has been already securitized does not really bring that much value, right? If I understood well, but in my understanding, not everything is securitized, right? We can bring new companies to be securitized through the STOs, right? To engage new creative entrepreneurs to start their business because they have better access to the capital, right? I actually understand STOs just another series of funding for a startup, right? We have a startup, you start with some angel investor, okay, seed, Series A, Series B, then you have some revenue, then you start Series C, but the Series C is actually an STO, right? You just use this tool, and then you have Series D, E, F, G, and then you do IPO, and it's just another tool, and bringing basically more liquidity inside there, making it more easier. So I think this definitely brings value to the market, just simple tokenizing or digitalization of shares. So
yeah,
basically that's what I wanted to mention.
I agree with you to a certain degree, but the securitization does not require tokenization.
That's
Meaning,
correct. That's correct. Yeah.
Right. So when a asset is securitized, that means you are creating a fractional ownership.
Correct.
Okay. And just because you created this a fractional ownership doesn't mean that it is required to have some kind of tokenization, or vice versa. So
Absolutely.
I would sort of separate the two, and just kind of focus on that. Meaning there is particular asset that hasn't been properly securitized, and you're trying to tokenize. That doesn't make a lot of sense to me, because in order to tokenize something, you have to kind of quasi-securitizing, meaning you have to allow a fractional
That's
ownership
correct.
because
That's
each
correct.
token.
That's
So
correct.
I'm going to
But
pause
I
this
think the
conversation because we've got
the
to have an SEO
tokenization
panel this
sorry,
afternoon.
the tokenization is bringing more securitization. I want to say that tokenization
okay.
is a driving force for securitization.
Right,
Another
right.
driving force,
And I
another
just-
tool
I want
which
to take
can
the
be
2
used.
minutes remaining. I love this because I love the intensity.
Right.
I want to take the 2 minutes remaining and throw a curveball at the panel. Okay, I'm very interested in the idea of national cryptocurrencies, there seems to be sort of the rebel movement, which is like Iran and Venezuela coming up with their national currencies. There also seems to be the Marshall Islands, which is not so much outside the regular international system. I'm totally throwing a curveball at all of you, but I just want to do it. When do you think national currencies, national cryptocurrencies are going to happen? Are we going to have a crypto ruble? Are they going to happen? When are they going to happen? And what will the effect be? I know this is totally out of the blue, so I'll start with you.
All right. So coming out of the central bank world, the BIS, I think you have different central banks at different stages in their journey in how in their investigation of how this would work within their monetary policy. It's not so simple as just issuing like a security token. It's much more complex because you actually have, it's like a form of digital cash, right? So I think I actually met with the vice chair of FINMA recently, and we had a conversation around this. She used to work. She used to manage the entire asset liability for the entire balance sheet of the Swiss Central Bank, the Swiss National Bank. So I asked her. So I said, "Where do you see like a crypto franc coming, Swiss franc coming out?" And she said no. She said they have other worries, and she took more the conservative stance and said there's too many complexities that need to be worked out. In a nutshell, yeah. So that's from a Swiss central banker, regulator perspective.
If I'm in Switzerland, I wouldn't be in a rush necessarily either.
Right.
But suppose Greece breaks out of the euro.
Right.
Do you see that happening potentially?
Maybe. I mean, I think with Greece you have a debt crisis, right? And issuing a stable coin actually isn't going to fix their sovereign debt, right? They still have to pay back all the debt owners, right? And then all the interest off of that. So
and they have to be able to devalue for
right. And then the other thing, I'm just thinking like at the top of my head, I've been in the financial industry now for quite a while. So I actually was there during the Argentinian currency crisis and then the Asian currency crisis. So we've had different forms of what do you call it, currency pegged baskets, right? Either from Argentinian peso or the Hong Kong dollar or the renminbi, and these pegs, right, either pinned by a collection of different goods and services or currencies or pegged one-to-one, they always break. Right? They always break. So that's where my hedge fund background comes in, right? Because I've seen very large macro hedge fund players out of New York break the peg. So
quick
that's
answer.
my
National cryptocurrencies happening or not?
no. That's my not soon.
Yes, but later.
Later. Give me a year.
Yeah.
2025.
Nice. National cryptocurrencies happening or not?
It's such a paradox. It makes no sense for central banks to issue truly decentralized national currency, because if you issue national currency using blockchain, that means you are mathematically fixing the amount of money supply. That is not the current system. Current system is government can print money unlimitedly, and they're giving up their control. I just don't see whether there's enough political will to make that happen. So I think for small nations where countries essentially bankrupt or have too much inflation, where they're enough political will to create such national currency, yes. But the very large economy where money supply is essentially credit-based, where central banks have all the credit, I just don't see how that could happen.
Fair enough. Okay, we're out of time. I want to thank the panel. Good job, everyone. Well done.
All right, and thank you very
Thanks.
much to Gordon Einstein for running our
Oh,
panel
okay.
for us. Thank you very much. We've got the Queen, we've got a very decent man, and I think there's an Austrian economist hiding inside Joshua. I'm going to have to get into that with him a little bit later over a beer. Yeah, he knows what I'm talking about. Fantastic. Thank you very much. You guys did a great job. Wonderful. There you go. We'll send you right down off center stage. Wonderful job. Thank you very much.